Have you ever wondered how all these traders on the internet are making 5, 10, 20K a day trading, and yet you still can't make $100 a day consistently? Well, today I'm going to show you the exact strategy that I use to make consistent wins every day. Now I'll hop over to TradingView and give you a full breakdown in a sec, but before we hop into the charts, I need to talk to you about something even more important. That being your mindset, risk management, and the power of starting small. Because let's be real, no strategy will work if you don't have discipline and proper risk management. It doesn't matter how good your entries are, how clean your setups look, or even if you hit a few lucky trades. If you don't have the right approach to the market, mentally and strategically, you will lose all of your money. This happens so often. New traders come in thinking they've cracked the code, they make a few winning trades, and suddenly they believe they've mastered the game. Then they start over leveraging, they stop following a system, and before you know it, their whole account is wiped in a matter of a few days. Trading is a skill, and just like any other skill, whether it's sports, music, or even something like gaming, you have to practice, refine it, and master it before putting real money on the line. No one picks up a guitar and starts playing like Jimi Hendrix on day one. And nobody jumps into a boxing ring and knocks out a pro fighter without years of training. So why would trading be any different? If you don't have control over your mindset and your emotions, you're already stacking your odds against yourself before you even place a trade. I see so many traders get caught up in the idea that I need to take a trade every single day, or take as many setups as possible and always be in a position. Guess what? That's one of the fastest ways to burn out and drain your account. The reality is trading is about quality over quantity. The best traders aren't the ones who take the most trades. They're the ones who take the right trades and execute them flawlessly over and over again. That means having the discipline to wait, even if it takes hours or an entire trading session before the right setup appears. Now, one of the biggest mindset shifts that you need to make is detaching from money. When you focus too much on the dollar amount, you start making really emotional decisions. Instead of following your edge in trading, you start revenge trading, chasing trades, closing winners too early out of fear. Think of it this way. Imagine a poker player, okay? If a professional poker player goes into a game thinking, man, I need to make $1,000 today or I'm screwed, they're gonna make reckless moves, take unnecessary risk, and ultimately lose. But if they play the game strategically, sticking to probabilities and trusting the process, the results will take care of themselves over time. And lucky for you, it's the same for trading. You're not trying to win every trade, you're trying to execute your plan consistently over hundreds of small little trades. Another key thing is learn to accept losses. Losses are part of the game. No matter how good you get, you will always have losing trades. Now, the difference between a newbie and a pro trader is that pros learn how to manage their losses, while newbies let them destroy their accounts. So when you can fully accept that losses are just part of the trading process, you take away their emotional power. And when you start taking away your emotions, you start trading like a machine. You start trading focused, precise, and completely in control. If there's one thing that'll make or break your trading career, it's risk management. Now, you can have the best strategy in the world, but if your strategy is off, it won't matter. You will eventually blow up your account. Most traders don't fail because they have bad strategies. They fail because they don't know how to manage their risk. So let's break it down. My number one rule in trading: never risk more than 1 to 2% of your trading account on a single trade. Now, I mean that like if my trading account had $10,000 in it, and if I wanted to place a trade, I would make it so that my stop loss wouldn't go above $100 to $200 in a loss. Now, I know it sounds boring, I know it might feel slow, but this is what keeps you in the game long enough to actually learn and improve. Now, here's why it's so important. Let's say you're risking 10% of your account per trade. That means that just 5 losses in a row can wipe out 50% of your account. And 10 losses, you're done. Now imagine instead you're just risking 1% per trade. Even if you lose 10 trades in a row, you've still only lost 10% of your account. And if you're following a system with a solid edge, the likelihood of 10 losses straight in a row are pretty low. Now, risk management also means knowing when not to trade. If you're feeling emotional, whether it's fear, greed, frustration, or even overconfidence, just step away. One bad decision can erase days, weeks, even months of hard work, so it's not worth it. Think of trading like running a marathon and not a sprint. Your goal isn't to hit home runs every time. You just need to survive long enough for your edge to play out. And the only way to do that is to manage your risk like a professional. And before you even think about trading with real money, you need to master paper trading or just practice trading on TradingView and map it out. Now I know what some of you are thinking, but paper trading isn't the same as real trading. It doesn't have emotions because it's not real money. And that's true, but here's the thing. If you can't be profitable in a demo account, what makes you think that you will be profitable when real money is on the line? Paper trading is where you refine your strategy without the risk. It's where you prove to yourself that you can follow your own rules and execute them consistently. It's where you work out all the kinks in your system, learn from your mistakes, and develop confidence in your process. There are way too many traders that skip this step. They get so excited and they want to trade with real money instantly because they want to start seeing if they can make money instantly. And then they just end up making expensive mistakes that could have just been avoided if they paper traded first and learned the process. So here's what you should do. Set up a paper trading account just like you would a real one. Same balance, same risk rules, same strategy. Trade it for at least a month and track and journal every trade. Write down the ones that you did right, the ones that you did wrong, what you did right, what you did wrong, everything. And if you're not profitable after 100+ trades, then you're not ready to go live. You only go live once you've proven that you can make money consistently. When you do this right, transitioning to real money will feel seamless, and you won't be second guessing yourself. And you won't panic as much because you know what to do, because you've already done it before 100 times in a simulated environment. So think of it like you're a pilot. They don't just hop into a plane and start flying passengers. They spend hundreds of hours in a simulator before they even touch the controls of an actual aircraft. And trading should be no different. Now this trading technique that I'm going to show you today is perfect for beginners who want to lock in consistent and easy profits daily. The system combines high time frame patterns, trend lines, and RSIs with fair value gaps on lower time frames. This will give you a structured way to catch high probability trades. So let's walk through it step by step. But before we dive in, I'm going to ask you a quick favor, and that's to hit that like button and subscribe button so you don't miss out on future trading strategies that can take your game to the next level. I'm waiting. Okay, let's get into it. Alright, so I decided to wait until the morning to film because it was just getting super late last night, so here we go. So this method is great for beginners and experienced traders alike because it keeps things structured and just helps you take high probability trades consistently. So it's a 3-step process. Let's write it out. Step 1 is to identify the overall trend. Now the first thing we do is zoom out to a higher time frame, so either the daily or a 4-hour chart, and we just analyze the overall market direction. Are we in an uptrend, a downtrend, or are we just ranging? Trading with the trend is always the best approach because trying to fight the market is how traders get wrecked. Now that is unless you're just doing a little scalp. So if you're in and out, fine, but otherwise if you're staying in the trade for up to a day or two, then you want to go with the trend. And we'll also look for major chart patterns that can give us clues about where price might be heading. And this step is key because it sets the foundation for everything else. So we want to trade with the flow of the market and not against it. All right, now step 2. Look at high time frame RSI. Okay, so next we're going to look at the relative strength index. I prefer the stochastic RSI on the daily or 4-hour chart to get a clearer picture of momentum and is price overbought or oversold. So, or if there is bullish or bearish divergence forming. So this gives us an extra layer of confirmation on the market direction before we drop down to the lower time frames. And I'll show you guys how to add the RSI in a second. And step 3, find entries using fair value gaps. So once we've identified the overall trend and confirmed momentum, we zoom into very low time frames like the 1 minute, 5 minute, 15 minute chart. It's kind of up to you. It's a matter of how quick you want to get in and out. If you stay in a trade longer, then you're kind of, the way I look at it is you're risking news coming out or something like that, or whale buying, or big wick. So if you're scalping, you usually want to stick to lower time frames and just get in and out, little trades, little profits. So on these low time frames, we're looking for fair value gaps. So these gaps show us imbalances in price, which we can use as precise entry points to scalp quickly and take high probability trades. So this method allows us to trade with the trend and use high time frame confirmation and get precise entries using fair value gap for optimal risk to reward setups. So let's show you guys how to do this. All right, so step one, we're gonna zoom out. I'm on the 4 hour right now. You could go to daily too. It's up to you, but or you know what? Let's draw it out on the daily, and then I'll show you on the 4 hours. So on the daily, as you can see, we're trading on SUI. So you just want to know the overall trend. So what you do is you're going to draw a trend line if you see one. Bam. So SUI is obviously in a downtrend. Now, unless SUI does something like this where it breaks out of the trend line, comes back to retest, fills this fair value gap, then if it does that, then you could be looking for a long right here, place your stop loss right here, and just let it run. But otherwise, SUI will probably hit this line, especially in the market right now and everything going on. It's probably going to hit this line, drop back down. So the trend is your friend unless proven otherwise. Okay, so this is what the trend line looks on the 4 hour. As you can see, it's similar, but it just touches it more times. So if you really want to get precise, you can go down the 4 hour and edit your trend line a little bit. But I mean, it's easy. That's basically it. And then what you're going to do is you're going to add the RSI. So I already have the RSI on, but if you wanted to add it, you just go up here to indicators, click indicators, and look up stochastic RSI. Boom. And you want to make sure you star it as your favorite. So once you do that, then it's going to pop up down here. You can make it bigger or smaller. I keep it pretty small because you don't really need it that big. But I mean, people trade using just the stochastic RSI and they do great. Like if you follow it precisely, like, so basically how it works is if it's down in the bottom range right here, that means that it is oversold. And if it's in the top range up here, then that means that it's overbought. And it honestly works a lot better on larger time frames. So I mean, look at this. So if you could have bought in here, bam, rode that all the way up to the top, sold, good profit. Hits that trend line, sell it, ride it all the way back down, bottomed out, boom, buy. That one's a little bit tricky. You probably would have stayed in. Then that's another buy, and then ends up even higher. So you would have made profit if you would have just stayed in. Then boom, bottom, top. So I love the stochastic RSI. I pretty much always look at it before I get in the trade, and I recommend you do too. And it's a free indicator, so why not use it? And then step 3 is find entries using fair value gap. So if you don't know what a fair value gap is these guys, these colored blocks right here. So to add that, you just go up to indicators and you're gonna type in Lux Algo. This is, oh, not Lux Algo, it's there it is. Okay, Lux Algo fair value gap, it's this guy. So you click that, then you're gonna come up here, click settings, and put the threshold to 0.15 and hit OK. And then now once we've looked at the overall trend and we know how to use the RSI, we're going to jump down to a smaller time frame. So I'm going to start on the 12 minute. I don't know why, but just the 3 minute, the 2 hour, and the 12 minute, I think it just works better than like the 15 minute personally. But you kind of just got to feel your groove. That's like, you know, what I like. So I kind of like to work my way down to lower time frames slowly and look at each one. So I just kind of, for low time frames, I kind of start on the 12 minute. And if you're looking at the 12 minute, there's actually a nice trade playing out right now. So I'll map it out for you in a second, but I want to show you what a fair value gap exactly is first. So let's zoom in here. So a fair value gap is when the candle before and the candle after, they leave a space where there's not any price action filled. So as you can see, the candle stopped right here and it stopped right there, leaving all this space that needs to be filled, which means that price usually will come back down into the box, fill it, and then return back to where it was. But ultimately what we want to do is we're going to take see this little tool right over here, we're going to click that button, then we're going to click, if you're longing or shorting, you should do this before you place any trade. And guys, everything in this video, all these indicators, they're all free, so just remember that too. So this is a free method. You can use TradingView, the free plan, and it all works fine. So what we're going to do is hit the long position. I'm going to place mine right there. Now stop loss, I put just below the latest low, so right here, as you can see. And then we're going to zoom out. And if you notice, right when we first got onto the 12-minute, it looks as though there is a trend. So if you took a trend line and you drew it from the bottom all the way up, that looks good right there. That should be your price target. Now you could put it at this fair value gap, but honestly it looks like it's going to come back up to this trend line. And so what this little tool does is it tells you your risk to reward ratio. So this is like our savior. So what this little guy tells us is that basically if your risk reward ratio is a 6, then you can get stopped out 5 times, but as long as you win that 6th trade, then you're in the money. But that's why we always want to keep a risk to reward ratio greater than I'd say a 5. Some people do lower, but I usually stick to 5 because if it's not a good trade, then just don't get in. Alright, so I opened up Bitchnix to show you guys. Bitchnix is my favorite exchange, and I'll show you in a minute why. But I'll leave a link below if you want to make an account here because it is the best exchange, especially if you're in the US because they don't require KYC. So we're going to go to SUI, okay, and then we were on the 12-minute. They don't have 12-minute, but 15 minutes close enough. Okay, so you're going to click here, copy price. This is your entry. I'm going to do, let's do 5. And also, you don't even need to use leverage. Like, I mean, if you don't have a lot of capital, then leverage trading is very handy and powerful, but you're way more likely to be successful without leverage trading. And especially if you're new, do not use leverage trading. But if you do, then you just want to make sure that you're using proper risk management, and that's pretty much key. So I always make sure my account's on isolated, not cross. I'm going to do 5x leverage, excuse me, and open, and then limit order. This is where you paste your entry. So if price comes down to where we wanted to buy, then I would buy it, and then quantity. So what I do is I put the stop loss in and everything before I select the order amount, because you never want to risk more than 1 to 2% of your account. So 1 to 2% of my account is about roughly like 50 bucks. Let's just say 50 bucks. So that means that if I get stopped out, then my stop loss would be 50 bucks. So what you want to do is you want to place your stop loss, which is right here. Copy price, stop loss, and then your take profit. Okay, and then what I do is I move the bar until it is 50. So I'm either going to lose 50 bucks or I'm going to make 265 bucks, which is a pretty good risk to reward ratio. And then you just hit open long. And let me this. And always double check too that everything is right, but I'm going to hit confirm. So there you go, you got price there, you got your take profit, your entry, and your stop loss. And then, okay, so this is what I love about Bitfinex that a lot of other platforms don't have, and that is that you can drag these to wherever you want. Like, it may not seem that handy, but this is actually like a game changer when price is moving very quick. I'm putting mine back where it was. So yeah, I'll leave a link to Bitfinex down below, and the fees on Bitfinex aren't bad at all. They're actually pretty good, and there's a lot of coins that you can trade with, and yeah, it's just a super nice interface, so check them out. So yeah, that's my 3-step trading process. I'll keep you guys updated on how this trade went in my Discord. If you want to join my Discord, I'm giving away free trials right now for a limited time though. And inside Freedom Traders, I give daily trade setups, trading lessons, market insight, and tons of macro fundamental analysis. So be sure to check that out, and also click that like button and subscribe if you want to see more trading videos like this. Also be sure to watch this video if you haven't already. I break down which projects that Trump has bought are the best to buy. And as always, I appreciate you guys, and I wish you the best. Later.